All right, market volatility has created a massive windfall for Wall Street banks, with Bank of America, Morgan Stanley, Goldman Sachs, and JP Morgan all reporting record trading revenue. Joining us now is Bloomberg Intelligence senior banks analyst Herman Chan, and it has been, Herman, amazing to watch. The banks have made so much money. The energy companies have made so much money. This war has been very profitable for also the defense industry, I imagine.
That's right.
But what about the massive miss we saw at Goldman Sachs? I can't get over on FICC trading.
Right.
It was $800 million less than analysts had anticipated. I think a 10% drop compared to the same quarter last year.
Right.
Did that not show up at other banks?
It didn't show up. It seemed like that issue was more specific to Goldman. So having Goldman kick off the earnings season for the banks this time around, it sort of introduced some questions on FICC trading across the group. But I think resoundingly, with the results from Morgan Stanley today, from the results of JP Morgan yesterday and Citi yesterday, that FICC trading was solid. Bank of America did post about flattish FICC trading, so I would point to them as on the mixed side as well.
Most of these shares, Morgan Stanley shares higher by 4.5%. Why wasn't this priced in? There's a lot of volatility. We assumed trading would be strong.
Right.
And it's not exactly a thing that they can, they can repeat it as volatility is strong, but it's so markets dependent.
Right.
So what wasn't priced into these banking shares coming into this earnings season?
I would say there was a lot of optimism coming into the quarter. The industry and the analyst community was expecting about mid-teen earnings growth year over year. So really, enthusiastic expectations coming in, and the banks have met that. And there's been some puts and takes, right, for the banks that I cover, some issues on net interest margin from Wells Fargo and some reduced expectations on NII from JP Morgan. But then on the other hand, Bank of America really offered some solid guidance on net interest income for the full year as well.
What have they told us about private credit? We've heard, $36 billion in exposure from Wells Fargo?
20 from Bank of America today, 22 from Citi.
Smaller number.
Yeah.
But what about the money that they make from lending private credit and private equity companies money to do these deals? What are the fees like for these big banks?
Yeah, the fees are great. You've seen it in the investment banking numbers, that those were still fairly solid quarter over quarter and year over year as well. So there's some really strong results on the fee side of investment banking, particularly on equities and fixed income. M&A might be a bit more choppier heading into the rest of the year, but the deal backlog seemed fairly stable, so we're enthusiastic despite all the volatility that we're seeing in the macro side of things, that things can be sustainable going forward.
We also had some of the regional banks, PNC, First Horizon, among them. I know it's a sector you also closely watch, Herman.
That's right.
Did we learn anything?
Yeah, PNC's numbers were great. They talked about some higher loan growth for the rest of the year. That's been working out really well for them. They just closed the First Bank deal that adds to their presence in Denver, which is expected to work well. M&T also reported today a bit mixed trends there in terms of some softer guidance for net interest income for 2026, really related to some deposit growth and some softer consumer lending.
All right, Herman, thank you very much for joining us. Herman Chan of Bloomberg Intelligence, a very busy week for him.